I think to get the balance right between fundamentals and judgment, as a bottom-up stock picker and as someone who looks at these markets in great detail, sometimes it's easy to get too stuck into the minutiae of the details of your models and your spreadsheets and so on. Sometimes you just have to look at things from a slightly broader perspective and say, I've seen this happen before in other markets. I saw this happen in Asia. I saw this happen in Latin America. I've seen this happen in other markets in which I've invested. So you use your judgment and say, well, if everyone thinks this, then maybe it's time to take a slightly contrarian view. I think the winners are going to be the countries and the companies that are less levered, that are less geared, and the losers are going to be those that have a greater degree of gearing. So I think the big winner in an Eastern European context, in a broader Eastern European context, is going to be Russia, because the Russian state generally has very little debt. The Russian economy as a whole has very little debt. And as it happens, of course, the oil price having risen 50% in the last 6 months is an additional bonus. So I think Russia is going to be the main winner. I think the big loser in the medium to longer term could be some of the Central and Eastern European economies which have higher levels of debt, which are relying on wafer-thin spreads to finance themselves. And I think those economies could be more vulnerable, not in the short term because economic growth is relatively strong, but longer term as the cycle matures. I don't think so in the short term. I think that as long as economic institutions broadly remain unchanged, qualities of central bank, monetary policy, fiscal policy and so on, the core tenets, if you like, of economic policy making remain the same, then I don't think populism is going to be a major issue. Where it would start to make an impact is where you start to see politicians getting directly involved on a much more activist basis in terms of making and formatting monetary policy for short-term political gains, as well as potentially fiscal policy as well, the handouts and obviously breaking through fiscal rules and so on. But we don't see any evidence of that happening in the short term. I think the best area for this year is probably Russia, where I think that the market, remember, Russia was the only major emerging market that didn't go up last year. It was basically flat in an environment where most markets were up 20, 30, 40%. And the oil price, of course, has come up 50% in a period of 6 months. The market is cheap even by its own standards. The market, I think, has been excessively concerned about these revised sanctions that are coming into place. And I think, of course, the economy is recovering. The economy is growing this year, probably going to grow by 2% this year, having shrunk by 4% 2 years ago. So you've had a positive delta of 6 percentage points over a 2-year period. Monetary policy is becoming more accommodative. It was the first time you've had a greater than expected cut in Russian interest rates for some time. Inflation is down below 3% and is likely to remain low. So I think everything is in place for a very good year for Russia. Well, I think the biggest threat is more of a global threat, that global liquidity tightens more than people think it's going to. I actually think we are in a sort of Goldilocks scenario as far as the equity markets are concerned, because they're under-owned, valuations are relatively low, and therefore any potential shocks to the fixed income market shouldn't move across to the equity market, simply because over the last 7 or 8 years the opposite hasn't applied. You've obviously had very strong performance in fixed income markets, whereas equity markets in most emerging Eastern European markets have not done very well over the last 5 or 6 years. I think one of them is going to be what's happening in Russia and Russia becoming perhaps a more normalised market rather than a market that's dominated by talk of sanctions and so on. I think elsewhere it's going to be the basis of economic growth in the region. Obviously, at the moment, Eastern Europe, or the Central European economies in particular, are benefiting from the cyclical recovery of Western Europe. I think that's going to start to plateau at some stage. You're going to start to see growth, not necessarily tailing off, but certainly plateauing at these levels. So it's more a question of at some stage in 2018, people are going to start looking ahead to 2019 and are going to start saying, is this growth sustainable, or is there going to be a slowdown? I would say I'm probably slightly more on the cautious side of things. I think that there is going to be decent growth this year. Growth next year perhaps will be a little bit less strong.